Hi, my name is Jeff Tucker, and I'm the principal economist at Windermere Real Estate. I'm kicking off a video series of economic updates organized around the key numbers to know right now. The first number today, 142,000. It's the net number of new jobs added in August, according to the latest data from the Bureau of Labor Statistics released on Friday, September 6th. This was a weak jobs report. Not only did last month's job growth fall short of expectations for 168,000 jobs added, the BLS also revised down their estimate of jobs added in the prior 2 months by 86,000 jobs combined. Now, the unemployment rate took a tiny step down from 4.3 to 4.2%, but that change was almost just a rounding error. Overall, the unemployment rate has still climbed half a point from its level at the start of the year. So while the level is still pretty low, it has been on a worrying trend, consistent with a pattern of a cooling labor market. The next key metric to know right now, 5.25 to 5.5%. That's the current target range for the federal funds rate, where it has been sitting for just over a year, but it looks like not for much longer. The Federal Reserve's Open Market Committee will meet on September 17th and 18th, and they're widely expected to begin cutting that benchmark overnight rate. Jerome Powell, the chair of the FOMC, announced in a speech at their annual retreat in Jackson Hole in August, their attention has now turned from taming inflation to protecting the labor market from further deterioration. Right now, investors are pretty evenly split on whether the Fed will cut by a standard quarter point or by a half point. Their choice will signal whether they're still a bit concerned about inflation or ready to throw their full weight into supporting the labor market. Now, looking ahead, the next big economic data release is the Consumer Price Index, the most widely cited inflation index, to be released on Wednesday, September 11th. The consensus is for a little more gradual cooling on the inflation front, down from 0.3% month over month in July to 0.2% in August. Finally, a quick update on where mortgage rates stand. 6.22% was the average 30-year mortgage rate on Tuesday, September 10th, according to Mortgage News Daily. That's the lowest that mortgage rates have been in a year and a half, and is down by more than a full point from where mortgage rates stood at their peak this spring, which was more like 7.4%. Many buyers are unaware of how much rates have moved or how big an impact that would make for them. For someone borrowing $750,000, going from 7.4 to 6.22% would reduce that monthly mortgage payment by over $500. All right, that is all for today. Thank you for watching, and be sure to subscribe so you catch my next economic update.